experts from across the retail banking sector have gathered here in South Africa to discuss business strategies for sustainable banking. The event is the Retail Banking Africa 2011. Joining us now to talk to us about retail banking opportunities is Tawanda Nyambirai, who's a Group CEO of TNN Holdings, a diversified Zimbabwean group with interest in banking. Thanks so much, Tawanda, for your time. Let's start off with retail banking opportunities in general. We keep on hearing about the rise of the African middle class, that there's almost 200 million people earning over $5,000. There's this middle class that's burgeoning that needs banking products. Is it really as exciting as that?
I think the issue is more than that. I think the issue is the change in the demographics of the population that is targeted by retail banks. Mm-hmm. There is an emergence of young people who are bankable, whose preferences are different, who are not looking for a banking experience, but who are looking at working and enjoying life.
Yeah.
Banking to them is an inconvenience. They want their bank to follow them where they play and where they work.
Okay, so
banks are now faced with that new breed of people, and they therefore have to adapt and change their ways of doing business to take into account the emergence of that.
Let's break this down into two demographics: the rising urban young middle class that you're talking about, and then the rural entrepreneur that's coming to the fore. The urban young, we want you see, I'm calling myself urban young, huh? We can debate that later. We want internet banking services, probably mobile banking like we've seen. We want synergy between our cell phones, our laptops, our banks. We want security of transaction. We want fast transactions. It's a technology game now for a lot of banks in Africa. Are they moving fast enough?
I've taken time to talk to the young like you. And I've asked them, do you like internet banking? They say, no, what I want is to pay when I need to pay.
Right.
If I go on Facebook, I want to be able to pay there. And I want my bank to have a linkage to enable me, when socializing, to transact. So what they are looking for is not a banking experience. What they are looking for is to carry on with their life, and for a bank to facilitate that they carry on with their life as usual. I think and that is the reality that we as bankers are faced with insofar as the emergence of that middle class is concerned. So we have to make ourselves relevant to that.
You know what's fascinating for me is when you go to East Africa, that's where you're really seeing dynamism, revolution basically in the banking space. You know, ATMs, for instance, introduced that can now do a forex trade without you having to do it face to face with anybody. We have some of the best banking infrastructure in Southern Africa, and yet we don't have those facilities. Why is it that some of the most sophisticated economies in Africa are still lagging when it comes to innovations?
I think because banks are set in their ways, and they are slow to adapting to the needs of the new bankable customer that is emerging. I think the bank for the future is one that will adapt more quickly and ensure that it takes into account the needs for the convenience of the emerging banking or bankable population.
Now let's talk about the other demographic, and that's the so-called unbanked population in Africa, who constitute a large base of that pyramid. They do transact in their day-to-day humble enterprises. They do want access to markets in the cities, and they're the so-called people who are putting their money under mattresses. They need access to basic banking services, and not just to be able to deposit and withdraw. They also need products. They need loans. They need them at affordable interest rates, at affordable commercial rates. So there's a bit of a gap when it comes to microfinancing.
Yeah, there are a number of reasons why people are unbanked. Some are unbanked because they choose not to be banked, either because they don't have confidence in banking systems. You'll encounter that a lot in countries like Zimbabwe that have gone through a very painful history where people lost value because some banks collapsed. People lost value because they had Zimbabwe dollars that are no longer being used in the market due to dollarization. So some people will deliberately decide not to be banked because they've lost confidence in a banking system. There are countries that have had bad experiences, like in the Congo, where at some point, I think during Mobutu's time, the state took people's monies. And as a result, they decide not to be banked. So we need to put those people in categories and then decide how we can ensure that those people can access banking services while dealing with their fears or concerns. And I think what bankers will have to do insofar as those markets are concerned is to abandon the traditional approach to banking. You have talked about East Africa, where there is the M-Pesa model, where banking service is being provided through mobile telephony, where one does not necessarily need to go into a bank, but still access some of the basic transactional facilities that they may require. We now have to look at extending banking through supermarkets and other retailers and utilities, the non-traditional forms of extending banking.
All right, thanks so much for your time. Tawanda Nyambirai, who's Group Chief Executive Officer at TNN Holdings, just talking to us about innovations needed.